You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time once again, one final time here for 2018 for the option block. My name is Mark Longo. Happy to be joining you here on this Thursday, December 27th, our final option block here for 2018. Won't be having one on Monday as it is the old New Year's Eve. And I'm a nice guy. I like to give people a holiday here on the old network. So this is our final show for 2018, wiping away a single tear. But don't worry, we'll be back in the new year. So you're not done with us yet. You're not rid of us quite that easily. And it's good stuff. We got a lot of good looking back on the year, as well as some of the recent tumult in the market in store for you today. And to help me do just that, let me welcome on my cohorts one last time here in 2018, Let's start off because his connection I know works. Wouldn't be the final option block of 2018 if one of our co-hosts didn't have some tech issues, listeners. But I think he's working, so let's go over to the Rock Lobster, Mr. Andrew G. from OptionPit.com. Mr. G, welcome back to the show, sir. How goes it being the only internet user in Maine?
The only internet user and what? King of the Google option search.
King of option search in Maine as well.
Put it on the map.
I haven't pulled the numbers recently, so maybe, I don't know, maybe Iowa or Nebraska have unseated Maine. Maybe there's one guy out there as well. But right now, as of our last checking a few months back, you were still the king. So you should call up Google and say, hey, what do I get for this? Where's my trophy? Where's my cash reward for keeping love alive here in Maine? Because you're doing it single-handedly. Well done, sir.
I try.
Yes, you do try. And also trying to make his way through to us despite myriad technical issues, we have Uncle Mike Tussaw from St. Charles Wealth Management also joining us one final time here for 2018. Uncle Mike, how goes it via the magic of this thing they call telephone, sir?
It is exciting. I'm hoping to get my Skype gremlins tamed within the next 10, 15 minutes or so. But for now, happy to be here via telephone. And Alexander Graham Bell would be proud of us.
He would be proud indeed as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, everybody. You know the dance, hopefully, by now. We've been doing it all year and for many years, but we're going to do one last time here for 2018. Going to kick things off, going to mix it up a little bit of a different format for today's show. We are going to kick it off with our kind of what's trading right now, but then we'll get into a pretty extensive look back, a lot of fun facts we have lined up for you about 2018. But let's kick it off. We're coming out on the heels here, hot and heavy in this holiday week. The continued standoff there in Washington, continuing to add volatility and indeed volume here and downside to the marketplace. As we're speaking right now, we're seeing most of the major indices off substantially. S&P off nearly 2%, about 1.9%. The Dow off about 1.75%. Tech-heavy NASDAQ off over 2%, about 2.35% right now. We're also seeing our old buddy VIX north of the 30 handle, 32.11. Oh, for my, shall we say, more optimistic to the downside, Vol Views prognostication. It could still happen, but we got to shed about, 10 plus handles in VIX cash by tomorrow. It was crazier things have happened, but that would be up there in the historic downsides for ye old VIX. And it doesn't sound like either side wants to capitulate anytime soon. So it doesn't seem like that's helping, going to help my cause anytime soon. And of course, VXX, that product that everyone was hoping would be well shy of the 30 handle by January expiration, at least judging by the open interest. It's going the other way, listeners, to the tune of over the 50 handle right now, 50 and a half. Oh, I know that's sad news for a lot of you out there. I feel your pain. I got some residual Jan out there as well, Jan puts. But, it's one of those things. You got to have some upside rolling. In fact, even ETF trends running on the whole, hey, you should buy some VIX ETPs right now. So every one of them other realizing long vol is the play, at least for the near term. This is, of course, coming on the heels, hot and heavy. What a whipsaw market we got. Hot on the heels of one of the biggest days, up days in market history. Of course, Wednesday, pretty much single biggest point gains across the board. The Dow certainly did 1,000 plus points, biggest point day ever. It closed 1,086 points higher, nearly 5%. S&P up nearly 5% as well. That's its best day since March of 2009. We also had the NASDAQ up almost 6%, 5.84%. That was also its best day since March 23rd of 2009, an inauspicious day for some folks, but auspicious day for the indices. So it's hot and heavy this week, and then now here we are back to the downside, giving all of that up, and then some here. So crazy town, I think, is the technical term for this. Let's turn to my cohorts here, see what they have going. Let's start with the man using that magical old school technology, Mr. Uncle Mike. Mr. Uncle Mike, sir, what's catching your eye in this tumultuous week, sir?
Well, I think, like I said on the past shows, this is a market for crazy people at this point in time. I think that unless you're looking to day trade with tight stop losses, I think this is, or put in very small amounts of money, this is a difficult market to catch some type of a trend. I think that when we have the macro turmoil with which we have, it's not going to get any better at any near term, at any point soon. So I think that until we have something, a deal cut for the government to not shut down, or perhaps some type of a deal with China, which there was rumors of that yesterday, which shot the market way up, we're still going to get a lot of craziness going on as this market goes on.
You heard it here second, listeners. It is still, if you were wondering if it was no longer a market for crazy people, unfortunately, no. It is still very much a market for crazy people. Mr. Rock Lobster, you concur? Is this a market for crazy people? And speaking of crazies, what are the crazies in your pit chat? What are they up to these days? What are they watching?
Amazingly, they are buying strangles in the SPX. So
interesting. That move's paying off of late.
It's every day for like the last 2 weeks. So, so I guess that's the magic of understanding how volatility works, and trying to price options through mathematics and all that kind of stuff that we teach.
What fun is basic math, sir?
Yeah, just math. It doesn't always have that opportunity, but the higher VIX goes, the harder the market has. it's not that the market has a hard time pricing it. It's just the people just don't bid the vol up. I mean, once it gets that expensive, they just don't have an interest in it. So, and they're too afraid to sell it. So it ends up with kind of being a little bit of a sweet spot. So that is that as far as a trade goes. Has been about the only thing, and besides the backdated, VIX, which is, kind of crazy town. VXX is going to be up 100% for it
That's
looks
just,
like for 20.
That's just madness. That's
so
just madness on every level.
99.9% of its value instead of 99.99% of its value, I guess. So, and then it will become VXXB, and we'll have a new perfectly crappy product that performs like it's supposed to.
Mark and I were talking about that on Volviews last week. Neither of us knew. It's going to assume the mantle of just VXX going forward. It's not going to keep it as VXXB, the name, are they?
I would assume so. I am still trying to get more information on that.
That would be a weird name. Everyone would think they have some sort of B shares then, right?
Or it will be the VXXB, but it looks to be trading like the same thing. It's just all the liquidity has to shift over, and all of a sudden, it'll just become whatever it's going to be, I would assume.
Let's just call it Crazy Town, and I think you'd be right.
We could just call it Crazy Town. And as of right now, I'm looking at my volume, and VXX is trading 3 times the volume of Square, 50% more than AT&T, 10 times the volume of Walmart, 10 times the volume of Walgreens. It's the only thing that's really lagging is the Qs and the SPY. That it is the big daddy on the block as far as volume goes. So people are still interested in it. I still think the product works as it was designed to work. So for people that don't quite understand it, of course, we have our VXX Made Easy, so you actually understand how it works. But we can talk about volatility. I don't know if we want to hit on this section, but this is we have a very backward, in general, situation. Backward meaning that the VIX cash is really high relative to the futures, but those futures keep climbing every day, and they're trying to catch up at this point. We could actually, it's possible to see a 30 settle in the cycle, which I cannot remember the last time I saw that.
Certainly wasn't 2017, sir. So we know that much. And since you mentioned all those numbers, and we're looking back at 2017, let's do a special look back here at what a year it has been for 2018. I wish I had some special stinger for this. I don't. We're just going to keep on rolling into our 2018 year in review. What a year it's been. I think you could sum it up a lot of different ways. I've seen a lot of people trying to do that in different ways. I think an easy way to sum it up is kind of what we were just talking about, the year that volatility decided to return. Or you can also maybe look at it on the flip side of that as the year that we saw, I think, the Trump administration that a lot of people expected in coming out of the gate in 2017, and then we surprisingly didn't get. We got a very much more subdued administration for the bulk of 2017, and that led to that and combined with the prolonged rally in stocks led to this just end strangle on volatility throughout the entire. If you listen to this network for all of 2017, listeners, the question was, whither the VIX, where is vol? It came back roaring in a heartbeat back in February when we saw everything that we had seen for pretty much the better part of all of 2017 turned on its ear. The so-called volatility feedback loop was rammed down people's throats. And we never really looked back from there. As the Rock Lobster said, we're threatening a 30 settle for the first time in quite some time out here. Of course, driving all that right now was, of course, all the macro trends. A lot of this driven by the administration. Again, kind of getting what we were expecting maybe in 2017, but a year later. So we have, of course, the trade war that gave a lot of volatility to the marketplace. Now, of course, we're on the heels of this government shutdown. Well, on the heels, we're in the midst of this government shutdown battle. All of that coming out of the administration as well. Of course, there's two sides to all of this, so the other side has to dance as well. And then we have the ongoing just threat of tweets, which continues to add a little bit of structural volatility to the marketplace. Would you guys agree? Would that be kind of your 2018? If you had to sum it up in one term, would you say that's kind of the year vol came back, or do you have something else in mind? Don't both jump in at once. or no one jump in. How about this, Mr. Uncle Mike? Do you agree with that? Is that your way you sum up the year? Oh, I think you lost him again. Mr. Rocklops, are you there, sir? Oh, looks like I'm having more technical issues here for our final show of 2018, as no one can hear anything. Let me see, listeners. I'm going to keep on rolling here while we get these guys hopefully sorted out here. All right. You know, what fun would it be if everything just worked, listeners? Let's bring that back. Here we go. But yeah, you know, it's an interesting thought experiment here that we all have to kind of wrestle with. Let's see if we got people back here. Excuse me.
I am here.
Ah, there you are. Can you hear me, sir?
I can't. Disappeared. We got Skype.
All right. Well, I was talking about my themes for 2018 as being the year volatility returned. Do you concur with that, sir?
I concur with it a lot. I was trying to think of times where this was similar what's going on right now. I think a couple of times that come to mind in immediate history, but of course I date myself because I'm old. But we had kind of the Russian financial crisis, 97, 98, that sort of thing happen. Everything looked ugly, and then we kind of popped. Prelude to Gulf War I, Gulf War II, those are other two times where we had like extended volatility, low liquidity, and then things kind of turned around. I think right now everybody's a little worried about the government G20 debt. Like, this is the kind of stuff that weighs on people's minds. What are they going to do? Clearly, the central banks have no firepower anymore to do anything. And this trade war with China, if it doesn't end or produce, like, we get out of it, or it starts to maybe consume part of the economy, there's like a real worry about recession and equity prices and valuations. I mean, you look at all of the big stocks, big momentum stocks, and they took all the multiple out, just gone, literally in a month, just crushed them. NVIDIA from 300 to 126, Amazon 2,000 to 1,300. Microsoft is still holding up, but still 110, now it's 97, so it's still down 10%. Google's down 25%. They clipped the banks. So, you know, a lot of chip companies, it's almost like the chip super cycle is over. You know, companies like MU trading at like single-digit multiples. So, you know, basically, literally the market just discounted all of the earnings growth we just had. We're like, okay, that's all. Right. So is it unreasonable? No, I don't know if it's even unreasonable. If you think that we're going to have recession because the Fed is not able to do anything, we just got to sit and just pay all these bills that we've accumulated over the last 10 years. Just the way it is. We have Gulf War to pay for. We've got the financial crisis to pay for. And this late in the cycle to have the deficits we have, and the EU is in a worse situation because they got. So I think all that stuff makes equity holders nervous, and they all got nervous with no liquidity. It's just an explanation of what happened, but that's part of the reason these bear periods go on for quite a while. And I think that's where we are now.
Mr. Uncle Mike, same question to you, sir. I'm assuming you can hear me. Hopefully you can. But how would you summarize the year that was 2018 to you, sir?
Macro craziness. I would say that a lot of times it seemed like we were excited about what would happen with companies that had relatively good earnings, but then all of a sudden a tweet would come out and we'd just get some type of craziness. I think another thing to recall was when we had the Val products. We had a Val product that basically was just taken away in, I believe it was February, or the XIV, I believe it was. And when I think one thing that a lot of people learned again about ETFs that don't track things the way that they should be ideally, if they're predictably crappy, as a wise man once said, you need to have a trading strategy as if something's predictably crappy and not treat it like it's not crappy when all of a sudden it is crappy. Because then if it does become too crappy, then all of a sudden you're going to get 100% losses one day on something that you felt was relatively stable, just based on past performance. The bad things that they warn you about can actually happen, and you need to be prepared for that. So we had the XIV going out. A couple other things that I would say that would sum up this year would be both complacency and fear. We were very complacent as a market in January, and then all of a sudden the bottom dropped out. Then markets started coming back. In the fall, we became complacent again, and then the bottom drops out again. So this is very much a year where we had 2 times where the market dropped very quickly, and it came back the first time, and we'll see if I don't think it's going to come back to the highs of this year in the next few days, or between today, tomorrow, and Monday. But overall, this is a year that we had a lot of emotions that we haven't really felt in a few years, with the markets going to higher and lower levels.
Yeah, it's been one of those years. Speaking of one of those years, we got some great data here looking at the year from an options perspective, courtesy of our friend, the Flow Master. He sent in some great data for us to discuss here on the show. If you haven't checked it out, check it out. TradeAlert.com or whatstrading.com are the places to go to get all this data for yourselves and a lot more. But let's start off with some fun games. I'm looking here. He broke down a number of different things, including the busiest trading days of the year. Interesting. And the top 10 trading days. I'm looking at the numbers, so I can't guess. I'm going to go on your own honor that you two are not looking right now as well. But I will say this, the number one trading day kind of surprised me. I thought I knew what it was, and it actually wasn't. So maybe that will give you a clue. Excuse me. Let's go back around the horn. Let's go the same way we just went. Let's go, Uncle Mike. We'll start with you. What's your guess for the busiest trading day of 2018, sir?
I will say I don't know what day it was, but I will say like the late January, early February. I'll say the day XIV died.
Okay, so that would be the 5th pretty much, right? Which was the start of that big bit of madness. The 5th and the 6th were the crazy days, but the 5th was kind of the day it really all fell off the rails. So I'm going to put you down for February 5th. Mr. Rock Lobster, is that your vote as well?
I was thinking about that, but then I thought, how about in October when we had that one-day plunge? So I'm going to say, hold on here. I'm trying to get my part pulled up. So it was October, like the 11th. I'm going to say the 11th.
If you say that day, sir, then you are indeed correct. Because I was in the Uncle Mike butt. I thought for sure February 5th had the lock on it. And it did until October 11th. So February 5th did 35.8 million contracts. October 11th did 36.9 million, almost 37 million. So over a million more than the February 5th did. That's saying a lot because February 5th really kind of came roaring out of a gate. I'll give you the top 10 really quickly. Number 3, February 2nd. So it wasn't, everyone thinks it was all February 5th. Remember, we had some tumult leading into that as well. Then February 6th, of course, which was the day right after when things were still hitting the fan. Then February 9th. So we were still rocking and rolling for that entire week. We were talking about 35 million, 34.7, 34.1 million. Then October 10th, 33 million. December 21st. So again, the year hasn't let up even into December. 31.6 million. October 26th, 31.4 million. December 20th, 30.5 million. And then Jan 16th with 29 million. Things were busier in January than I think we recall as well. Let's continue this analysis if you guys have a guess for the busiest month of the year. I will also give you a hint here. This one kind of surprised me as well, but I won't say any more without giving it away. Let's go Rock Lobster first this time.
I'm going October.
Okay, makes sense given your last pick. Mr. Uncle Mike, same question for you.
I'm going to say December. Is December on the books yet?
Well, it's not really on the books.
Yet?
It doesn't really count yet, but I don't know the total numbers for December. It's probably strong, but I will say this right now. I don't see December on here.
Oh, wow. You know
okay,
what? November could be
so
possible.
With that, since it surprised him, I'm going to go with November then.
Yeah, it did surprise me in that I was thinking it was February again. Once I saw the October data, it made me think a little bit again. But February is actually only number 3 for the busiest months of the year. So how crazy is that? So October, number one with a bullet, 555 million contracts on the tape. Then number two, that kind of what surprised me the most. It wasn't February, it was January. That's why I said January was actually busier than I think we all remember February. You know, we all focus immediately on the Feb-apocalypse and all that craziness. But things were starting to pop off actually in January. And the numbers here show it. 467 million contracts on the tape in January, 464.8 million in February. So more in Jan than in Feb. Then March with 434 million, November 429 million, August 426 million. Then we drop off a bit. May 403, June 401, April about 398, and July 367. I don't have December on there. I'm guessing December will come in somewhere in that middle range there, Uncle Mike. Speaking of to all volume, by the way, this is, of course, another theme of 2018. This is an overall strong year for options volume. We don't have the final days in the books yet, obviously, but we already broke 5 billion contracts, not just cleared across the board at OIC, but last week we got the breaking release that they actually cleared 5.01 billion options contracts as well. Remember, they clear other stuff. They clear futures. They do stock loan. They do a bunch of stuff over there. So just options, which is, of course, where we care about. They've surpassed that 5 billion level, which is historic. A new record since 2011. So that's kind of been an ongoing theme. People have been waiting for years in the option space. When are we going to turn things around volume-wise? This was the year that did it. Unfortunately, it came driven by a lot of negativity in the marketplace overall, a lot of volatility, of course, but also a lot of systemic shocks and things like that, which are not things everyone likes to see. So it took that to get it going, but this year, of course, 5 billion contracts. So it'll be interesting to see if we can keep on that pace for next year. If the end of December is any indication, and the lack of conciliation we're seeing across the board in Washington is any indication, and certainly the lack of any sort of conciliatory moves really in the trade war any indication, maybe 2019 could keep a pace. If you're asking yourself, you're saying, Self, what was the number one overall options product last year? It was SPY with 817 million contracts, followed by number two, SPX, 362 million. So that shows just what a chasm there is between number one and number two. Remember, there is a notional size difference there. Excuse me, SPX a much beefier contract. So if you add in the multiplier there, SPX doing a whole bunch of business, but just contract-wise, it is a distant number two. And then number three, the Qs, 245 million. So that shows SPY, how much bigger SPY is. SPY, 817 million, then 245 million for the Qs, and shy of a quarter million for the Qs. Then we get VIX with 165 million contracts. Again, kind of a good year for VIX, but still not as rock'em sock'em as you might imagine. Number five, Apple, 134 million. Number six, good old IWM, aka the Russell, 114 million contracts, pretty much tied with EEM, also 114 million contracts, number seven. Number eight, Bank of America, 94, almost 95 million. Number nine, Facebook, 83.5 million. And number 10, our old friend VXX, 78.5 million contracts out there. So, anything surprising you guys about those top 10 products? Anything you think you should be in there? Or any surprises, Uncle Mike or Mr. Rock Lobster?
No, I can't say I'm surprised by those numbers.
No, I mean, that's, for the most part, it was a bullish year until the last quarter, and then it kind of turned into a not bullish year as we try to limp in for. What's funny is, I think we could still limp in as unchanged on the year, right? I'm looking at 24.25 SPX, and I think that's almost unchanged for the year, right? Unless I'm losing my mind. It's not very far away from unchanged.
Well, see, we were coming in. I know we were at the nadir back on the 24th, a big sell-off then. They were down 12%. For the year. After the big pop on Wednesday, it was down only 7.7%. Now today's sell-off again. I don't know. It would take a lot to make us unched in the final. That's the S&P. I don't have the Russell here. I had that in the other show notes. But the Russell also down heavy for the year. And the Dow was down nearly 12% after the big sell-off, and coming into at least from after Thursday's rebound, coming in about 7.5%. Again, these don't take into account today's sell-off numbers. So I think it would take a Herculean move in the next couple of days, Mr. Rock Lobster, to make us unched for the year. Crazier things have happened, but I would be surprised to see.
It would take a bit. We need to go 267 SPY-ish. So I don't think that's happening.
No, probably not. Unfortunately, as bullish as Uncle Mike is, I don't know if even he is that bullish.
But interesting to note that we can't get back there. So that's. I mean, to me, to close down on the year is people. There's a huge, they can blame a lack of liquidity and blame a lack of everything else, but all I can say is there was a growth multiple that was attached to everything, and now that multiple is GONE gone. Back to, more sane equity valuations by like a long stretch. So I don't think it's going to change much. I still think there'll be a lot of volatility short term, but it isn't going to change until that, geopolitical macro, the man with many hats, as he would say. It's macro, macro, macro. And right now, unfortunately, instead of just the economy kind of rolling along, it's back to that geopolitical macro crapatola that we had to deal with for all those years.
Yeah, you mentioned valuations, and how many times were we talking about Apple 150 puts, right? We had that 150, 200 strangle we talked about a few weeks ago. It seemed so distant when we were hovering around the 175 level, right? And now here we are, Apple at almost at that level, 151.35. So those puts are very much in place. And maybe that should be a follow-up question we ask. Here we are right now, Apple at 151. Do you still want to sell those 150 puts, or are you? I know you were kind of keen on those, Mr. Rock Lobster. Mr. Meatball, he was a little bit more concerned. He thought if we hit that level on Apple, then something was structurally wrong, and maybe we're at that point. Are you still liking those? Maybe not the put so much, but you still liking that level, Mr. Rock Lobster?
I've thought my whole thing with all the trading has changed to just buying puts in these products and then just buying call spreads and leaves. So it's because of this structure. I'm just going back. I had to go back into my memory banks, and you cannot, like Mike said, you have to plan on like short-term noise. So shorter term puts and longer term call spreads, and just you have to let kind of standard deviation play. You have to let these huge moves play out, because we're not talking about 1%, 2%, 3% moves anymore. We're talking about 1%, 2%, 3% per day minimum. And who the hell knows what could happen? I mean, Apple go to 125. Why not? It doesn't really matter. Like, the prices don't matter if there's just no buyers anymore. All that doesn't matter. People are still going to sell whatever they're going to sell. So price and level doesn't matter. It's just like, oh, well, the company's still there. It still looks like it's viable. So you just have to find a spot where you're interested. So I think the higher the vol is here, the more you try to keep the long gamma of your position alive, and then you sort of plan for some sort of longer term bounce. And these things usually take months to play out, and we could be, the SPX could be below 2,000. It's not that far away, to be honest. It's only 20% away, and you're like, Andrew, that's crazy, but nothing's crazy when there's no buyers. So you have to take out what looked like a fundamentally pretty decent economy, but with the soft underbelly of crazy fiscal deficits here, and the same thing in Europe. Eventually, those bills are going to have to get paid somehow, or at least the amount of debt accumulation and interest rates, and I think that's what really kind of freaked everybody out. They're going to keep taking rates up that governments, to be honest, really can't afford to pay. So they're going to have to do something. And right now, Congress is doing what they do best. They're arguing about a wall.
Exactly. We can always count on them to be top of mind and relevant with the discussions that are most necessary.
They really matter.
Mr. Uncle Mike, I know you're kind of our resident. You used to be our resident Apple devotee, less so these days. Is this 150 level, just price-wise, is that starting to be more? I know you'll have your innovation index and you're waiting for all that to turn around, all those other things, but certainly more attractive than at 220, right? What are your thoughts here on Apple at these levels?
No, I think Apple's going to have, they're a company that makes money and they make good products. Companies that make good products and make good money typically do well. Once again, like I always say, are they back to the world changer like they were a few years ago? No, but they make good products, they make good money, and they have a lot of cash. And companies like that typically do well. And the 150 level, I think, is a great deal if you want to have that as a longer-term holding, or perhaps a wheel stock or something along those lines. I really think there's a lot of good things that are happening with it. So I really like it at 150, but to the levels that I once did, not even close.
Not even close, says Uncle Mike. Since we're talking Apple, let's look at what was close there in terms. Apple was, of course, our number one stock option, equity option for 2018. Let's see what else was lighting up the tape. Number two, actually, Apple, by the way, 134.3 million. Number two, a fairly distant number two, was Bank of America. Always lighting up the tape, Bank of America these days, with about 95 million contracts on the tape. Number three, good old Facebook. Not exactly been a banner year for Facebook. Another day, another privacy data handling scandal for Facebook. That's telling in the stock. The stock at 130 right now. So again, all these levels we talked about before, just coming into play. Ford at 7.5 right now, 760. So I mean, things are getting low. But again, they can always go lower. So bear that in mind. Facebook, 83.5 million. Number four, AMD, another perpetual stalwart there in the top these days, which is kind of interesting. 73.7 million for the year. Number five, GE. Again, we know what happened with GE there. 69 million contracts there. Number six, Micron, 64.5 million. Number seven, good old Baba, 60 million. Number eight, our old friend Tesla. Spoiler alert, looks like those Jan 10 puts ain't coming due anytime soon. Tesla at the 300 level, though, 304. So all it's got to do is drop another 290 handles or 250 for the 50 puts at least. And then those puts will be due. So, but spoiler alert right now, not so much. But Tesla off 22 handles today. 304 right now as we're talking here. Tesla doing 49, almost just a tick under 50 million contracts for the year. Number 9, Netflix, 47 million. Number 10, Amazon, actually lower on the list than I thought. Amazon, 45.5 million contracts. Let's also round out looking at the top indices for the year. Number 1 with the bullet, SPX. Again, this is not, people get confused about SPY and SPX. That's obviously an index as well, but those are categorized as ETF options. So if you put SPY in here, it blows the doors off all of them, but we're not talking SPY. We're talking just pure index options. SPX, 362 million contracts, number 1. Number 2, VIX, 165 million. Then it just falls off a cliff. Number 3, RUT with 13.5 million. Number 4, XSP, 4.6 million. Number 5, the NDX, 3.6 million. Number 6, the old Dow, DJX, we talked about it before, never really got the love. I remember I have a kinship to Dow options because they launched effectively my first day on the floor of the SIBO. I walked in, they were playing rock music, there were sports stars there, they were shooting off confetti. I was like, man, this is the best place ever to work. My first day on the floor. And then they never did that again. But it was very cool when they launched those products. Now doing a paltry 1.37 million contracts for the year. Then number 7, .xau. Probably something to do maybe with gold, I'm going to guess, with the ticker, but I don't know that one. 1 million contracts, pretty much even. Then OEX, the old OEX, how the mighty have fallen. 498,000, not even million, 498,000 contracts for the year. Oh, that used to be the player. That used to be the one. Forget SPX, it was OEX, listeners, and now a mere shadow of its former self. No one talking the 1.5 anymore. MXEF, 111,000, and number 10, MXEA with 668,000 contracts for the year. I'm just going to pull up really quickly that XAU. Yeah, that is the Philly Gold and Silver Index. So in case you're wondering what that one is. Since we're talking new stocks here really quickly, there was a big discussion, a big brouhaha over who will be the big market cap leader to end the year. Remember, there was a lot of talk about Apple hitting the 1 trillion level. Oh, how distant that seems in the rearview mirror now. When we first started looking at that, I think it was the folks at StockTwits and others who were kind of analyzing all this. It was about a month ago or so, and it was a horse race with actually Apple was in the lead at 877 billion at the time. 866, number 2 billion for Amazon. Number 3, 860 billion. Now with all these sell-offs coming into today, again, this doesn't have all of today's numbers. This is about a few hours ago, so the sell-off has exacerbated since then. But as of a couple hours ago, coming into showtime here, Microsoft was back at number 1 with 753 billion market cap, followed by number 2, Apple, 721 billion. So how the mighty have fallen there as well. And number 3, Amazon with less than 700 billion, 693 billion. In fact, Amazon closing out its worst quarter since the 2008 market meltdown there. Again, they also ever so briefly touched the 1 trillion level back in September. Ever since then, it's been just on a plummet. It's off 27% in this last quarter here. Again, that's pretty much, if it holds this, it's the worst quarter since the dark days of 2008. Apple is off percent-wise, though, is doing worse, off 30%. Microsoft off a paltry 12% because their core business is still pretty solid outside of a few other areas. Facebook off a mere 18%, just for give you some to give you some comparisons here. Just crazy stuff here. I don't know, Mr. Rock Lobster, any thoughts here on the market caps or these funky indexes? It is kind of stark. You look at the index numbers as well for options volume, how it's all SPX and VIX and then everything else. They're not even a distant fifth.
I think that's the way people use, like we launched our the BCE fund where we're using SPX and we're using VXX. It's an efficient product, and if you have an idea how to use them, everybody follows the SPX. That's the benchmark. So it doesn't surprise me that a lot of professionals use those products. Like Mike, he's like, okay, well, if I'm going to have clients and they're going to buy SPY, what am I going to use? I'm going to use SPY options. So I think it makes sense that those are the busiest traders.
Yeah, Mike, anything about those numbers really resonate to you? Obviously, the index numbers or the market cap numbers or any other little end-of-year nuggets that are resonating with you, sir?
No, I mean, just to add to what Andrew said, I like trading things that are very liquid, and I like trading things that are penny bid-ask spreads in that I don't have to worry about getting filled on my 900 lot if I want to get it at the bid or the offer. And because if I'm trading something with a $1 bid-ask spread on it, then I have to try and play games that I'm probably not going to do very well at. And that's why I like SPY and the GLDs, the SLVs, and things that are very liquid. And so it doesn't surprise me. And in terms of just the market caps and where we're going with it, can't say I'm really too surprised there either. The one thing I am kind of surprised that we did not get a Santa Claus rally this year. But aside from that, and who knows, maybe we'll get it. You never know. We could go back to even on the year, Andrew, right? Well, maybe not. Overall, can't say I'm overly surprised with a lot of what you just said.
Yeah, we did get a Santa Claus rally. It was just all on Wednesday, Mike, and then
it was one day.
It was all
yesterday.
Yes, it was all encapsulated in one day, and then that was it for the season. But yeah, if we do go back to Unched, as the Rock Lobster seems to think could happen, then that would be the mother of all Santa Claus rallies. So crazier things have happened. Maybe not that many, but things have happened. By the way, before we roll out of our end of 2018, by the way, if you guys have your favorite memories or thoughts or themes or trends or things that really resonated for you for 2018, hit us up. You know how to find us. We can always talk about them in the beginning of Jan 2018. Always a quiet time, well, at least usually a quiet time for markets this year. Maybe coming up, maybe not so much. Really quickly, Mr. Rock Lobster, too. Obviously, we do a lot of odd block, unusual activity here on the show. People always ask me what are the favorites, the hallmarks, the ones that stand out to me. It's kind of hard to find a theme. Usually every year there's kind of a narrative. Remember in 2017, even though vol was not existent, we saw people scratching ever further for yield and selling calls for 6 months for like 12 cents and a lot of garbage like that. So that was definitely the theme for 2017, which was people giving up far too much for not enough return in terms of looking farther afield for yield. I didn't see as much of a trend or a theme in this year's odd block. We saw a lot of the same stuff. We saw yield harvesting, obviously. We saw a lot of line in the sand puts. Maybe that was our theme, in which case a lot of those lines in the sands have been crossed. So hopefully people had plans for that. I think obviously the size winner in terms of trades has to be the GE put guy, right? He did, 300,000 contracts and made size. I'll have to go check and see if he actually closed those bad boys out. But money-wise, that guy has to be the winner. I can't think of anything else that comes close. Can you, Mr. Rock Lobster?
I can't think of anything that comes close as far as just the breadth. I'm still convinced that Warren Buffett is going to buy GE and cap his career with, I just decided to buy GE. Because you know what? I've done everything else. There's nothing else I can't do, so I'm just going to buy GE. And I think those 6 puts, there's 136,000 open, it looks like right now. So maybe they did close some or take some, but I just don't think he's lined in the sand at 6. I think whoever did trade that did make some money at some point. So, but it depends, of course, on what they've done against it. But still, there's 136,000 open. on those puts.
So we can't put him fully in the winning category yet because he hasn't closed them. But again, let's see. Let's pull up GE right now. Maybe there's a method to his madness because I'm sure GE ain't looking too good right now. It's at the 7 handle right now, off about 40 cents or about 5% again today. So maybe he's happy he didn't close all those bad boys out because GE not looking great. Other than that, Mr. Rock Lobster, I mean, Lie in the Sand was a kind of a continual thing. Any other themes really resonate for you overall? And I went through our list of kind of trades to watch throughout the year last year, and there was no trend to kind of any of them. They were kind of all over the place. They were buying calls, they were buying puts, they were selling puts. Does any trend really in aggregate stand out to you from the year of the odd block, sir?
I have to say, not really this year. Because remember a couple of those years we had like the smart guy where we thought the trades that would never work and made a fortune.
Men's Warehouse is kind of the epic trade for that. We mocked that guy around. I think that was 2016. I think maybe 27. I think it was 2016. But we mocked him mercilessly, and he went on to just laugh in our faces at how much money he made. But there were not many of those this year either. Ones that we really roundly mocked that turned out to be winners. We just talked about a couple of episodes ago. Remember, we did our rundown of some recent trades. They were big size trades, and all of them worked, and then no one took them off. So we and anything they kind of they deserved mockery. We don't do that on the show. We're not here to mock. We're here to just learn and inform people. But there's a lot of that. Maybe that's the theme of this year: is do something with your stuff, right? when it moves in your favor, for the love of God, take it off. Because it's, things could happen. And things have happened this year. So, maybe that's our narrative. Maybe it's a combo of line in the sand puts, a lot of those, as well as kind of just people putting on winning trades and then failing to act, which is, again, we don't see all sides, so they could have other sides that could be working out for them. But in general, I guess if I had to think of it and one in aggregate, that's probably the one that comes to mind. So there you go, listeners. If you have your favorite odd block trade or a theme that you saw running through the course of the trades this year that we missed here, hit us up. We'd like to hear from you guys. But it was a kind of a weird scattershot year, which is kind of interesting in and of itself. Speaking of interesting, let's see what you guys have on the docket as we keep on rolling into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. We're coming up on our final question of the week here for 2018 as well. So get on over to @options on the old Twitter machine if you haven't done so already. Make your voices heard. Last week we asked you on the vol product side. We had a lot of people come on the network this year talking about their new vol products for 2019. Which one excited you the most? We gave you 3 choices: Voldex, SKUDEX. Those are the Nation Shares products. The Real Day, Real Vol, those are the realized vol products from our friends over there at Volex/Demand Derivatives. And the Spikes product from MyAx. And winning those products-wise was 29% with Voldex, SKUDEX, followed by 20% for Spikes and 14% only for the Real Day. But the overall winner for the poll with 37% was, I'm just going to stick with VIX. So clearly none of those products yet managing to resonate with you guys out there, but again, maybe they need to probably launch first, get some contracts under their belt to really prove themselves. Right now, they all are still theoretical, even though Spikes and others have been approved by the SEC. So, rounding out the year, we're asking you our biggest question of the year, which is pretty much time to play the VolViews crystal ball game, but do it for a long time out. We're going to have to do this tomorrow on the show, so giving you guys a chance to play along as well. Quite simply, where do you guys think VIX will close for 2019? And we gave you the bonus out. We gave you some crazy ranges to vote in the poll. You can always do that. But we want to win the big prizes, to win the money, to win the stuff, whatever we're going to give away. We haven't figured that out yet. Not cash, obviously, but something cool. Probably good prizes, options, insider stuff, maybe some Amazon. Oh, who knows? All kinds of fun stuff. But we're going to give away some prizes. You guys have to play along. You have to reply or you have to DM with your specific pick. And then the closest of you within 1 point, remember, you gotta make it somehow accurate, will win the fabulous prizes. So we gave you 4 ranges, the relatively low range of the 8 handle, which would be quite low, to $11.99. And then we have the kind of normal range of the 12 to about $16.99. I know people are gonna take issue with how we describe these, but just dial it back and relax. I know the long-term mean is 20. Don't hit me up about that nonsense. We don't care. Elevated 17 to 23, somewhere in that range. And then the very elevated, shall we say, which is north of 23, which is where we find ourselves today. So interesting stuff there. I'll give you guys a chance. Mr. Rockhouse, if you're going to be on Vol Views tomorrow, you can maybe, if you want to table your specific pick, because I'm going to wait for mine till tomorrow. But if you have a thought on the range, but also maybe if you want to weigh in now on where you think VIX will close next year, have at it, sir.
Well, I'll wait, but I'm just going to say you stole my zones.
Oh, are those your exact VIX zones?
They're close.
I didn't even know. See, look, great minds. I had no idea. I just like to mock your zones.
You mock them, and yet you use them just like everybody else does.
At least my description.
Mock my zones.
At least my descriptions were a little bit more resonant for the audience. They're actually descriptive. Yours it is zone 1, zone 2.
I'm coming up with better names for them. I decided, but I've decided I just called you in the chat. I called you a scurvy dog for stealing my zones. So that's okay.
Well, there you go. Great minds think alike. You've been around the vol space for a while. You kind of know what the zones are in your head. If you forget about the marketing that says the long-term average is 20 or the long-term mean is 20, forget about that nonsense. Listen.
Yeah.
Go with our zones. That's where the real action is.
Now they're the option block zones, and the crystal ball zones. Oh my gosh,
they've been usurped. See, you had your chance to rebrand them, you never did, and now the opportunity has been taken from you.
Marketing genius has stole them and run.
So you're gonna be on Vol Views tomorrow. So I will allow you to hold off your pick.
I will. 90 delta on that.
Okay, so I know I'm doing that tomorrow, so I need another day to crunch my numbers. Mr. Uncle Mike, if you like to play ball, and this is a challenging one. We do this every week on Vol Views, but usually for the next week, not usually for the next year. So if you have a thought, sir, if you'd like to weigh in, or if you want to just guess a zone, I'll let you do that too.
Oh, well, I think you really do a nice job coming up with these zones, Mark. Thank you for doing that and making it clear for me and all the listeners out there.
You're welcome. Someone needs to do it because these weird numeric zones, they have no resonance to the audience.
For sure. Now, if Andrew's not about to shoot me right now, I'll give you my prediction. I think we are going. Since I'm the resident bull here, why not? Let's make this so we have a single-digit VIX by the end of 2019. We are going to rally. We are going to come down. So if I'm just giving random guesses, then by all means, let's make it a positive random guess. So I will say a 9.72 VIX on the final trading day of 2019.
Wow, interesting. And so you're back to the 2017 administration. All is right with the world. I'm going to put you down for that. I'll make a note of that. That's a good one. I like it. I would not be upset at that prediction. There's a good chunk. There's a good chunk of the industry that would be, but not me, Mr. Uncle Mike. If that would happen, I would not be mad at you. Get your vote. Some of you already have. The poll just kind of went live. We're getting votes all over the place. Remember, if you just vote in the ranges, you don't get entered to win the fab. But maybe we'll even scam some prizes from the option pit folks. Maybe we'll scam some prizes from Uncle. We'll have a whole prize pool waiting for the winner here.
We could definitely put in VIX Made Easy, VXX. We could put in some good prizes.
Yeah, so you guys will get some good prizes. I'll also scam, I think, some of our show friends or Vol Views like I did the other time to get them to make their picks too. The Thompson boys did really well last time. They were kind of spot on. So maybe a little bit of getting them to come on in here again. All right.
That's their job, right?
That is their job. You're right. But they were surprisingly good at it. They've been on the Vol Views show before, and their predictions have been all over the place. But that one time, it worked out. And when the mullet and Tulum were lining up, that's when their prognostication is super key. If you don't know what I'm talking about, listeners, check out Vol Views when they come on because they got some good names for their strategies. Let's round out the year with a little bit of positivity. It's been a maelstrom of madness this year. Let's round it out with this comment from Senez or Scenes, however you want to pronounce that. It says, "Hey guys, just wanted to thank you for putting out so much great content this year. You make my day roll past a little quicker, and I always learn a thing or two. Keep them rolling in 2019. Well, you're welcome, Mr. or Mrs. Senez. You clearly are a discerning listener. You know quality stuff when you hear it. And we're happy for you guys. We're thankful for you guys as well. You guys are literally the reason that we do all this. So I don't know if you've noticed, but there have been no major sponsors on Option Block for pretty much the entirety of 2018. That's probably going to be changing in 2019. But still, we kept cranking it out there for you guys, because we know you appreciate the show and we appreciate you. So we want to make sure you guys still have the content coming your way here as we roll on into, let's see here. Well, we kind of just did around the block. We'll do one for the rest of the week. And maybe if you have anything else to add for the rest of 2019, we shall do so in our final around the block for 2018.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, so we talked a lot about what we saw in 2018, what we saw this week as well. It's been a crazy cakes week, I think is a technical term. We're also giving I'm going to be giving, Rocklops will probably be giving his 2019 prognostication for VIX coming up tomorrow, so stay tuned for that. Vol Views, noon Central, 1 p.m. Eastern. But before we do that, let's go back around the horn one final time here for 2018. Uncle Mike, we'll start with you. What are you watching for the rest of this week? And if you have any final thoughts for things... Actually, we have a question. Maybe we can hit this one. We'll kind of combine this into the option, the around the block. We have James asking, one thing you think options traders should keep in mind for the new year? So maybe if you have something you want to add on that front as well, Mr. Uncle Mike, have at it.
I do. So as we look back on this year, we saw a lot of things that we talked about on the show. In terms of what an option trader should keep in mind for next year, I would say initially that we're on a dip right now, and because of the fact that we're down for 2018. And so going into next year, you have the opportunity to buy the dip if you'd like to. Oftentimes people look at markets going way higher and saying, wow, I wish I could have bought the market way back at that price. And a few weeks ago, SPY was at 290. Now it's at 240. And if you were looking at the market at 290 saying, wow, I wish I could have bought at 240, well, now's your opportunity to do so. Now, of course, manage risk and make sure that you're doing things the way that you should be that matches with your overall portfolio. Now, in terms of what I'm watching, I think we are in, yes, it's a market for crazy people, but I think at this point it's a Howie Mandel market. And what I mean by that is that they're looking for we're looking to see if there's a deal between the Congress and the president to see if we can get the shutdown to end, if we're going to get the wall that Mexico is supposed to pay for. We're looking for a deal with trade for China, and we're just looking for deals all around. So to quote Howie Mandel on his new show being resurrected after years of absence, deal or no deal. And that's my thought as to what I'm watching for the next week and the next few weeks, actually.
Deal or no deal, indeed, Mr. Blanked on your name there for a second, Mr. Rock Lobster. Good thing the year is coming to a close. I give my brain a little chance to rest here. Mr. Rock Lobster, what are you looking for the rest of this week? And also for our friend James here, if you have one thing people should keep in mind for the options traders in 2019, what is it, sir?
Well, the one thing is at least the beginning of 2019, we have what is historically high vol. The reason I call it zone 4 is there's a reason. The vol you see will very well not be around in 3 months. Historically, statistically, it's not. However, it can continue. So the one rule about volatility going up is, it will come down eventually. That's the reverting part. The only problem is you just don't know when. So option prices that you see now most likely will not be here in a couple of months. So if you have to take, sometimes if you're not able to trade short term, what my suggestion is you take a longer term view and, use the leverage of options and the opportunity that the prices are giving you now to construct, investments that actually give you some bang for your buck. I'm not saying we're going back to 2,900 anytime soon, or getting the Qs back to 193 or something like that, I think was the top. But there is a lot of room now for stocks to move around. And, the market has a long memory as far as it likes to go to places that it's been before. So downside always easy, but we also know how high we can go on the upside. So that's giving you a much bigger range. So what I would say is, anything can happen with options. So you have to keep in mind that we have very high vol right now. It probably won't last forever, but you also have great opportunity for the types of moves that we've had and the leverage that you could get using options right now. And if anything, I would be more of a buyer of options in the long term, just because the breadth of move can be pretty darn big a year from now.
Anything can happen with options. I like that. It kind of could be a theme for our overall network. Anything can happen with options. We certainly have seen a lot of anythings this year, listeners. Oh, what a crazy one it was. Hopefully you enjoyed our content. It doesn't mean we're done yet, not by a long shot. If you're listening live, go get a beverage, relax, come back in about 27 minutes. We will be live, kind of doing a similar thing here, but for TWIFOS, looking at a year back and the craziness that was the futures side of the space. Futures options, of course. So energy, man, nat gas was crazy. So was crude, gold. We saw, ags, all sorts of fun stuff, S&P and other indices. A lot to talk about on that one. So if you like S&P and index vol, we'll be talking that there as well on TWIFO in a little bit. Or of course, join us tomorrow, noon Central, 1 p.m. Eastern, for the final volatility views of 2018, where I will be held to the fire, as well as the Rock Lobster and others, to make our 2019 year-end closing VIX pick. I don't know if I'll be as low as Uncle Mike, but that'll be hard to do, but we shall see. Meanwhile, though, let's go back around the horn one final time for 2018, see what they have cooking for us. Let's start in the land of the Fox. Mr. Uncle Mike, sir, what do you got cooking for our listeners here in the new year?
Oh, plenty of things cooking. If you are looking for a financial advisor, it is and you are looking to just work with your New Year's resolution, I am your man, at least to talk to. I might not be your man to work with, but talking to me, we can find out if we work well together. Feel free to contact me if you have been hesitant about doing so. Now is the time, because one thing in the new year, I might be raising my minimums because this show has really gotten me that much business. So I like being a man of the people, but make sure that you contact me soon, because I'm not sure how long I can keep doing it. I am only one man. 312-212-3531, or check out my website at stcharleswealth.com.
The man's just too good. He's just too busy, listeners. So hit him up now before Uncle Mike has to maybe take the Fox away and you can't click anymore and you can't play. So head on over to stcharleswealth.com to learn more. Click on the Fox before he's gone. All right. And last but not least, Mr. Rock Lobster. I guess unless you join me tomorrow. But Mr. Rock Lobster, what's cooking in the land of the pit for 2019, sir?
Well, I think the best thing will be our Options Made Easy course here really soon, where we will be talking about using options for long-term investing, how to use them, how to structure them, how to help you manage, let's say a long equity position, all the stuff that makes using options great, because it's the leverage of the option, using it in your favor, that makes it great. So look out for the Made Easy series coming up in late January. As far as right now is, we have our Christmas deal going on, so surf on over to our website and you can get a great deal on the Option Pit Gold course. Everything you need to learn to trade options. So anyway, there you have it, and we will see you later.
We will indeed see you later. If you're listening live, then we'll see you in a little bit with TWIFO. If you're listening on the old podcast, then just keep listening on your platform, because other shows will be hitting it right immediately after listening to this one. Or, of course, we'll see you tomorrow for Vol Views. Otherwise, we'll see you in 2019. Wow, that sounds like so far away, but it's not. We'll see you in 2019 for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.